now, we'll talk about the Relative Strength Index, or the RSI. So this is an indicator used to identify the strength or momentum of prices. The gist of the indicator is that it compares the average gain of the crypto whenever candles close as green with the average loss of the crypto whenever the candles close as red. So the context of this is that in a strong uptrend, you'd expect positive days to have bigger gains in comparison to the losses. But if the green candles start to become shorter and red candles are becoming bigger, it shows that buyers are starting to become weaker and sellers are starting to take control. So the three main ways to use the RSI is through identifying oversold and overbought conditions, finding divergences, and using the RSI as a filter for trend strength. So first is the most commonly known use of the RSI, finding oversold and overbought conditions. So basically, readings above 70 signify that the cryptocurrency could be overbought. On the other hand, readings below 30 show that the crypto could be oversold. So this method is typically useful whenever you notice that there is a sideways trend present. Since sideways trends are where buy low and sell high strategies work best, you can use the RSI to help identify when it's time to buy or sell. As you can see in the chart, so prices usually bounced whenever the RSI headed below 30, and on the flip side, prices also usually started going lower once RSI headed towards or above 70. And now the second method is finding divergences. So divergences can help traders spot potential turning points in the market. Divergences occur when prices make higher highs, but the RSI is making lower highs. In this instance, it's called a bearish divergence, or a sign that prices could start going lower. On the other hand, if prices are making lower lows, but the RSI is making higher lows, it's called a bullish divergence, or a sign that prices could start going higher. Bale, the main reasoning behind why divergences work is that momentum is already showing signs of weakness. So, for example, pwedeng umaakit pa yung prices, pero pagapang na lang siya ng pagapang. So, yung pwedeng analogy dito is someone trying to run a long distance. So, yung layo na tinatakbo niya, pwedeng palayo pa rin ng palayo. But eventually, mapapansin mo na napapagod na siya. Tas yung takbo niya, bumabagal na until eventually, lakad na lang yung kaya niya. Of course, pag napansin mo ng lakad na lang yung kaya niya, it's a clear sign na onti na lang titigil na siya. And likewise, in the markets, once you notice that the green candles and rallies are starting to become weaker, it can be a leading indicator that buyers are losing steam and eventually mawawala na ng buyers. And of course, vice versa for downtrends. And of course, this doesn't work 100% of the time, but it can be strong enough to give you an edge in the markets. So I wanted to note lang as well that there are variations called multiple bearish and multiple bullish divergences, where, as the name suggests, multiple divergences are occurring. And this is usually a stronger signal that a reversal or a retracement could happen soon. So lastly, the RSI indicator can also be used as a filter to find cryptocurrencies within a strong trend. So basically, if the crypto is able to stay above 50 most of the time in terms of its RSI, it's a good sign that the crypto is within a healthy uptrend. And it shows that the green candles are bigger than the red candles. So it's a good sign that buyers are in control. On the other hand, if the RSI is constantly below 50, it could be a signal that a strong downtrend is present given that the red candles are bigger and sellers are in control. So there are multiple ways to incorporate this into your screeners, or really there are multiple ways to use the RSI whenever you screen for crypto. And ideally, you'd need to experiment and look for RSI behaviors that happen the most during the setups you're looking for. So here, honestly, creativity can go a long way since there's no set formula fit for everyone. You really have to find what works best for you. And yeah, that pretty much wraps up our lesson on the RSI indicator.